Hey everyone, hope you're well. It's Forex James here with another video for you. It's been quite some time since I've published anything on YouTube, so I'm glad to be back. Hope everyone is doing well, regardless of where they are in the world, in this midst of global pandemic. Okay? And I sure hope that trading is doing well for you as well. It's in my belief that if you're a good trader, you'd be able to make money regardless of the market conditions. Okay? You just need to be able to apply the correct strategy. And there are only two market conditions, so to say, and they are a range and a trend. Okay? And lately, the market's been trending, it's been tilted to one side. People are flocking to the US dollar again, just like what happened in 2008. It's still regarded as a safe haven. So it's the market sentiment and fundamentals that have been driving prices lately. Okay? If you look at your chart, you'd see major trends happening almost in every pair. Some are weaker trends, while some are stronger trends. Now, I'd like to leave you guys with one tip that could potentially improve your trading game. Okay? It is based on my own experience and based on my own mistakes that I've made in the past. Okay? Let's take a look at some chart examples. We have a daily chart here for our example today. I look at the H1, the H4 daily, and the weekly. Okay, the upper time frames give me that direction bias, whereas the lower ones would give me those opportunities for an entry. Okay, I've circled some turning points in the market here on the daily chart. I refer to these points as the turning points because that's when the market usually shifted from going up into going down. And that's the reason why I've called them the turning points. There are a few more turning points which I have not circled. Okay. For example, this one. This is a minor one. This is another one here. Okay. These are the major ones that tend to stay for a couple of days. Okay, as these are daily candles. Another one here. Another one here. This one as well. Okay, you get the point. These are swings in the market because the markets never travel in a straight line. There's always structure that's being made. In a downtrend, you'd see lower lows, lower highs, lower lows, lower highs, lower lows. Okay, and then uptrend, it'd be the opposite, which is a high, a higher low, a higher high, and so on. Okay. Now, I'd like you to just pay attention to the circles here that I've marked. Look at the color of the candle and also the wicks of the candles. We have a long wick here, another one here, one here. This one's pretty long too in comparison to the body. Okay, and this one's very obvious. And the second thing to look for is the color of the candle. A bullish candle is simply a white candle. A candle that closes bearish is black. Okay? Pay attention to the candle that happens on the turn or after the turn. We have black candles here. Black candles here. This one as well. This one, a long wick followed by a black candle. Okay, this is a huge black candle. This one's a white candle, but it indicates that there's lots of selling pressure. Okay, because price went up only to close where it started. Okay, and the next day a black candle followed, another one here, and so on. Being able to spot turning points on the daily chart is a very powerful edge, okay, that I use every day for my own trading. Okay, once I get my direction bias right, it's then easy for me to just go into the lower time frames and make those good risk to reward trades. Okay, but first you need to be able to spot these turning points. So the two things that I look for are the candle color and the candle wicks. Over the years in my trading journey, I've made lots of mistakes. Okay, and one very vital mistake that I tend to make is that I'm always trying to pick tops and bottoms, meaning I often get caught in trying to time the market so precisely at its very turn instead of just waiting for the market to turn and then just following along. Okay? And this is a very costly mistake, guys. And this is often caused by the fear of missing out, or so-called FOMO. Okay? Now I'm gonna draw a scenario here, and I want you guys to tell me if you're able to relate to this. So let's say we have an uptrend here, and what I like to do in trends like this is just wait for the dips, right? Most of my trades are trend following trades. Okay? So if you're a trader and you notice that, oh, the market has moved this much, there's these two things that most people tend to do. Okay, one is that they take a buy here. Okay, because seeing a move like this makes them really want to participate in the move. Okay, and the other guy, he's gonna take a short. Since he's missed this move, he wants to be part of the action by shorting this move and going the opposite direction. In other words, he'd be calling the top right over here. So when he finally got into the trade, he's glad he had a position only to be stopped out. Another scenario here. We have a downtrend. Okay, low highs, lower lows. And let's say you've missed out on this entire move. Okay, then you saw a range form. You'd be like, oh, this could be the turn to the upside. Okay, remember, you're not in position. Someone who is already short would simply just trail the stop loss along the lower highs. Okay, but since you're not, you'd be saying to yourself, oh, this is going to be so awesome because I'm able to pick the bottom here. And you decided to go long. Okay, only to get stopped out, obviously, because the momentum is still going to the downside. Okay, and it's going to take some time for price to slow down and eventually head the opposite direction. If you're able to relate to any of these situations, I've been there myself. Okay, what you need to do is to stop looking for reversals. This is the message that I want to get across to you guys today. And it's really important, especially during these times, because the market's really just trending in one direction, guys. Okay? This global pandemic has created one of the best trends that I've ever seen. Okay? And it's so easy if you're just able to sit and ride the wave, instead of you keep looking for that reversal and trying to catch the next top or bottom. The mind is always playing tricks on us. Therefore, it's always important to trade what you see. Okay? And going back to this chart, before having a bias, okay, before trading with direction after the turn, have you seen the turn happen? Ask yourself that question. Okay? What do you want to see to have that clear direction bias? And they are the wicks of the candles and the candle bodies. And as you can see here, after the turn, price would stay in its course for a period of time. Okay? So if you've missed this move here, this whole move to the downside, don't worry. There'll be plenty more opportunities for you to get short. Stop thinking that it's going to be the end of this short move by, let's say, looking at the support here. Again, once the market has decided on its direction, it tends to stay on the path for a while. Okay, that's why I look at the daily chart for my direction bias. So with that being said, thank you so much guys for watching this video. I hope you've learned something new that could improve your trading. Don't forget to like and subscribe if you've enjoyed the video. Feel free to comment your thoughts and opinions. And should you have any questions, don't hesitate to just contact me at my website at forexjames.com. Thanks for watching guys. Have a good one and have a safe one.